for a discussion of some of the very important questions and proposals raised by Professor Baradaran's new book, How the Other Half Banks, Exclusion, Exploitation, and the Threat to Democracy. So we're going to open with some remarks from Senator Brown, and then Marissa will begin to speak, and Senator Warren should be joining us shortly. And before we go any further, I also want to recognize the presence of Mark Dimenstein, who's the president of the American Postal Workers Union, with us today, along with many, many others who've been major contributors to this conversation already. So with that, let me turn it over to the senator.
Thanks. I will be brief, but thanks very much, Lisa. This is my second event today where Lisa introduced me, so how cool is that? Okay, you could. You do whatever you need to. Yeah, she sat, as soon as she introduced me, she walked to the back of the room like she was in church and didn't want to listen to anything I said. So thank you. And a couple of things. First, I wanted to encourage those of you who are Senate staff or support workers generally to join us every Wednesday, starting last Wednesday. We are doing a boycott in the Senate cafeteria in the Dirksen building. Workers in that building in the cafeteria are paid poverty wages. They serve senators, who most senators don't know their names or don't know much about them and rarely ask them questions. No reflection on any of us, or me or my colleagues. But we're asking that the privatized company, restaurant associations, pay $15 an hour and that they allow them to join a union if they choose to join a union. We are asking Senate staff, and last week I joined them, and this week Senator Harry Reid and Senator Schumer joined us too. We had maybe 75, I don't really remember, don't know how many because they were in and out staff that would bring their lunch or buy their lunch somewhere else and sit in the cafeteria but not buy anything in the cafeteria. We see the supervisors standing there as people that generally fight unions tend to do. Supervisors stand there near the checkout line watching the employees. I don't know if they're watching to make sure they don't steal or watching to make sure they don't talk to people like us that are trying to help these workers. So feel free to join on Wednesday at noon. Bring your lunch, I'm not going to recommend any place, go to wherever you want to go, or don't eat anything and just sit there. But coming in, that can be helpful to those workers. We've told the workers we're going to keep doing this as long as it takes. And we sent a letter that I organized with Senator Sanders that I believe every Senate Democrat signed asking for $15 an hour wage and a union if they choose. And the letter went to the Senate, the chair of the Rules Committee, Senator Blunt from Missouri, who has been helpful but is open-minded but has not. He makes the final decision on what happens here. So I encourage you to do that, which has nothing to do with this, except that what Marissa Baradaran is doing fits right into this in many ways. I normally don't recommend books. I have not yet read her book, but I'm going to. I absolutely am going to, because anyway, I don't make excuses, but I'm going to read your book in the next week. But I want to mention three other books to you. In the 1930s, there was a book called Let Us Now Praise Famous Men by James Agee, and Walker Evans was the photographer. They were sent out by Fortune or it was either Fortune magazine or Forbes magazine, I don't remember, to look at Appalachian poverty in 1937. Their book helped to change the country and helped to inform policymakers. Then in 1962, I believe, James Harrington wrote a book called How the Other Half, or the Other Half of America, or I can't remember the name of the book. What's it called? How the Other Half Lives. And LBJ credits that book with helping him build the political will in the country and shining a light on poverty, not just Appalachian, but poverty in America. Third book, and this one I have read, and hers is the fourth book, which I haven't yet read, is a book by Catherine Eden and Luke Schaefer called $2 a Day. It documents people, 1 million families and 3 million children in this country live on less than $2 a day cash. They may have food stamps, they may have housing vouchers, they may have Medicaid. They simply don't have cash to buy tickets for their kids, bus tickets or school supplies or whatever the daily cost of life is, even for the poorest people. They interviewed people in Cleveland, Chicago, Johnson City, Tennessee, and the Mississippi Delta. I'll tell you two quick stories about two of them. The authors sat at a bus stop in my hometown of Cleveland. My wife and I live in the city of Cleveland. The zip code we live in, 44105, had more foreclosures than any zip code in America in 2007, the first half of 2007. They were in another similar kind of neighborhood at a bus stop and watched these city bus RTA pull up every hour, disgorge 5 or 6 passengers who would then go in to the plasma center and sell their blood for $30. They could do it. They would accept a person's blood twice a week. Some of the people coming in had to take iron pills to get their blood to the quality that the plasma center would accept it. They also told a story in Mississippi in the Delta where a woman who had the only freezer in the neighborhood in rural Mississippi, she would buy popsicle sticks and little Dixie cups and Kool-Aid, and she'd sell little frozen pops for 50 cents, and that's how she got her few dollars a day to live on. This book is the same genre of the 3 others, and I'm hopeful that it has the same. $2 a day has not yet reached the stature of the Harrington book or the AG book. I'm hopeful it will. I think it has the potential to, and I'm hopeful that Maris's book has that same potential. And I would close with this, that the importance of all of you as policymakers telling stories and if you're Senate staff or whatever you do, when you hear from people, recount their stories. I mean, much of what I try to do in the Senate, when I was on the committee that helped to write the Affordable Care Act, I was on the committee that did Dodd-Frank, is talk about stories, what it's like to be foreclosed on, what it's like to be denied because you have a child with diabetes, being denied health insurance, and what you have to do to compensate for that, what their lives are like. That's what they did in the AG book. It's what they did in the Harrington book. That's what Schaefer and Eden did in $2 a day, and that's what Maris is doing. She mentions, for instance, and I will then wrap up and let her explain more, to read Thelma Fleming in Louisiana. Has 2 jobs. She loses one of them. She has to borrow $300 to make ends meet. You know what happens. Once they're in the payday lending downward spiral, they don't get out. One of the things that Senator Warren in the back and I have worked on is legislation on earned income tax credit that you can get an early refund on your ATC. If you're eligible at the end of the tax year to get $3,000 on your earned income tax credit, that after you've earned some amount of that, say in October, your car breaks down, you ought to be able to get a $500 advance on that $3,000. It doesn't cost the government anything. You will get $500 less in March when you file your taxes, but why shouldn't you be able to get that advance to fix your car so you can stay on track and at least eke out a living without having to borrow that $412 from a payday lender and pay and pay and pay and pay? It's those stories that will convince even hard-headed, if not hard-hearted people in Capitol Hill to actually change some of these policies. And that's why the work you're doing is so important. So I'd like to introduce Marissa. And Elizabeth is here. Okay.
Thank you. But I really wanted this chance to be able to talk about Maris's book about how the other half banks. And the reason I wanted a chance to talk about it is because this book reminds us of the role that banks are supposed to play in our economy and in our society. And sometimes it's the reminder that's the most important thing that happens, that banks were originally conceived of as part of public service, that they were public institutions, that banks had a special status with the government, and that the government, in return, expected general service for the general public. That was the whole idea behind it. And this compact has fallen apart. Banks still get their half of it. They still get the special privileges. It's just that it's not paying off for the public in the same way anymore. So think about what banks get that no other industry gets. They get cheap insurance for their deposits, they get cheap loans through the federal discount window, and they get the wink and a nod promise of a bailout for the too-big-to-fail financial institutions. But on the return side, the banks haven't kept up their end of the bargain. As the professor points out, the industry underserves nearly 40% of all households in America. More than 100 million Americans turn to payday lenders and check cashers for basic financial services. The cost to these families is enormous. She works through the statistics and shows that basically for a family that has to turn to alternative banking services, they are spending about as much on basic financial services as they spend on food. Think about that. And these are the families that can least afford it. And it's a problem that's actually getting worse. Right now, we're watching banks flee communities of color, the large financial institutions are closing branches in low-income neighborhoods so that they can open more branches in high-income neighborhoods. So we're in a circumstance where much of America just doesn't have access to banking services. And the question becomes what to do about it. And this is what I think I love best about this book. Among the things I love best about this book. I always have many firsts here. But it's not only that that Marce's book points out how the basic compact has been broken. She points out how we can fix it. That this is not just one of those things we have to wring our hands and say, well, it's a big and complicated problem and good luck. And, she tacks on 3 pages at the end that says, we could all, if we had a magic wand, we could fix all of this. No. She has 2 very powerful proposals that she works through in great detail. And the first is postal banking. And I commend this book to you, if for no other reason than to read the work around postal banking as she works through the details on it. I said last year about this that postal banking has tremendous potential to bring basic banking services back to rural areas and to inner cities. And through partnerships with community banks and credit unions, postal banking could also help smaller institutions access millions of new customers. So this is kind of one of those, postal banking could be the matching service in between. Lots of people who need access to basic banking services, and community banks and credit unions that could get access to a whole new range of customers. I see this as a win-win-win. It is a win for the unbanked, a win for small banks, and a win for the Postal Service. We have to remind ourselves that if there are those in Congress who want to keep talking about running the Postal Service more like a business, one of the first things a business does is that it reaches out and tries to develop new lines of business that fit with the kind of work it does. And as the professor points out, postal banking certainly fits within that. The second point she makes in terms of what can we do, how can we make change, is around Glass-Steagall. Now, I've been watching the debates lately, and a lot of people say about Glass-Steagall, well, if Glass-Steagall alone had been in place, it might not, all by itself, have been able to stop the financial crisis. I think that's just the wrong question to ask, the wrong point to make. The way I see this, the basic question we should be asking about Glass-Steagall is, why should investment banks have access to your FDIC-insured checking accounts and savings accounts? Why is that helpful to the American economy? Why is that helpful to America's middle class? Many investment banks have to go out and compete for all of the money they get, and they have to pay a rate of return that's commensurate with the risk. But for a handful of the largest financial institutions in this country, once Glass-Steagall was knocked out, they have the opportunity to combine the risk-taking of the investment banks with the subsidized insurance for checking accounts and savings accounts. I think that's the wrong approach. And I just point out a little, if we're going to do history and how it was supposed to work, remember, with Glass-Steagall in place for more than 50 years, we didn't have banking crises. We had a banking industry that served the economy. It helped provide the finance necessary to build up small businesses, to help finance bigger businesses, and to help build a strong middle class in this country. When Glass-Steagall was weakened and then ultimately eliminated, much of that fell by the wayside. And so we've begun to see this disconnect between Wall Street profits and middle-class prosperity. So the professor talks about the importance of reinstating Glass-Steagall. I think it's a very interesting argument for everyone to read. I hope you will read it. Because again, she takes us back to first principles, what we're trying to accomplish with our banking system, and the importance of having a banking system that serves the economy and serves America's families. So I'm just going to conclude by saying, this is a terrific book, and I heard part of what Senator Brown was talking about at the end, and that is when you look for books that are transformative, when you read one that reminds people that, wait a minute, there's another way to think about the core issues here, that the key point of this book, that over a century ago, we made a deal in America with the banking industry. And the American families have kept up their side of the bargain. The government has kept up its side of the bargain. It has provided benefits to these large financial institutions. The problem is the banks have not held up their part of the bargain. I think it's time to change that, and I believe that this book, How the Other Half Banks, is one of the best ways possible to do that. So I'm going to run to the floor to give a speech, but I want to hand this over to Marissa and say how much I appreciate your work. And sorry I can't stay for more of the conversation, but really is a good book. Read it. Thank you. Thank you, dear. Thank you. Thank you.
I'm going to start by being very uncool. This is sort of the highlight of my life, so thank you all for being here. Okay, so the book talks about a problem, reveals some of the historical causes of that problem, and suggests a possible remedy. So the problem, as both senators mentioned, is that over half the U.S. population would need to borrow money or sell something if they needed $400 within a month. That's a Federal Reserve statistic. Now, this is sort of what life happens, unexpected expenses, your car breaks down, your kid gets sick, etc. And when these people have to borrow loans, if they don't have friends and family or something to sell, they have to go to payday lenders, and the charges here are something between 300% to 2,000% APR loans from these payday lenders. As for basic financial services, 40% of the public is either unbanked or underbanked, meaning that they rely on alternative financial services. And like Senator Warren says, this is about 10% of people's paychecks, more than they spend on food. It's also, by the way, very stressful and time-consuming. To go and pay your bills by cash, you have to wait in line at the water office. I've seen this firsthand, right, to pay your bills. And it just time and sort of resources out of people who are already strapped. So when policymakers and academics usually talk about this problem, they talk about it in terms of regulating payday loans, right? So setting maximum interest rates or banning products, things like that, right? Disclosure, the Military Lending Act, and these are all great. But these efforts have been quite frustrating because there's a large demand for these services. And when one service gets capped or banned, it pops up and reincarnates in another form, right? In my state of Georgia, payday lending is banned, but we have title lending. And title lending essentially means you get to pay the same amount of interest, but you lose your car if you don't pay back the loan. And sometimes they'll just freeze your car wherever you're at, this is a much worse alternative than payday loans. And so, I'm a banking scholar, and I come at this from a different point, right? So the amount and price of credit that banks lend is a social policy decision. Bank credit has always been entangled with the federal government. That's the market for credit since the New Deal, and especially in more troubling ways since the financial crisis. There's this social contract where the federal government does protect banks and funnels credit to them, and they are supposed to be the middlemen to pass this credit on to the public. Now, this credit allocation and support is at an all-time high. Through a variety of means, the federal government creates these credit markets through day-to-day lending, through the Federal Reserve, liquidity protection, deposit insurance, the GSEs, and obviously ex-post bailouts, as we saw in full force during 2008. So the amount of credit flowing through the market is at an all-time high, provided by the federal government, and it is priced at an all-time low. So I see payday lending and the problem of the unbanked as not just a market problem, but as a social and political problem. There's a disparity in banking services today. There's a regulated, highly subsidized banking sector for those of us who can afford to bank. And then there's an unregulated, wild west of hodgepodge fringe lenders that's unscrupulous, sometimes predatory for those who can't. So how did we get here? So there have been changes and a transformation in the banking sector starting in the 1970s until today, where both market changes and policy decisions led to a merger wave, homogenization, and a conglomeration that squeezed the community banking model. So it used to be that we had, credit unions and savings and loans, and these were created during the, 1910, 1920 era. And I go through this history in the book where these were banks I call them banks with a soul. They're meant to be, mutually owned for the poor, and these got squeezed also during the deregulation era, whatever you want to call it, the banking transformation, where they were forced to compete with the mainstream banks, and they no longer serve the low income. Right? In fact, credit union customers are now, higher income than bank customers, which is something that I think a lot of people assume that credit unions are still marketing to the poor, but they're not. So, we still have this myth of George Bailey's Bank, and we tend to put our hopes in the rebirth of George Bailey's Bank, and we see this movie every year. But 20 years ago, George Bailey's Bank got swallowed up by Henry Potter's bank, and then over the last decade, it got eaten up by Bank of America. So the harder problem, and by the way, when these banks started closing up shop in low-income areas as they chased higher profits in higher-income areas, the fringe lenders filled the void, and there is a direct causation. As soon as these community banks shut down, the fringe lenders come in. There is no payday lending industry before the 1980s. And today there are more payday lenders than there are McDonald's and Starbucks combined. Okay, so this is a huge sector, and it is meeting a need that used to be met by community banks. So I think the bigger question is, how do we fix it? And for the last 200 years, and for the last specifically 30 years of legislation, the answer has been a rebirth of community lending. You're all, working in the Senate or perhaps are familiar with some of the recent legislative efforts, but you've got the Community Reinvestment Act, FDIC programs, CDFIs. All of our legislative proposals over the last 30 years are to reimagine or give new juice to the community banks, but it hasn't worked. And I think, look, there's still a big role for community banks to play, and we should loudly lament the loss of George Bailey's Bank. But we need to consider that genie having left the bottle and really understand that we're in a national banking era and recognize this. So I think it's time to consider a public option in banking. And this is why community banks are no longer interested. So the public option in banking, I think it makes sense for the post office to do this. And the post office predates the Constitution in the U.S., and it is not an understatement to say that the post office is responsible for our modern democracy. It really was an equalizing force in the founding. So the Postal Act of 1792 made 3 important decisions that made the post office a very unique institution. So one is that the Postal Service was not going to make a profit. It was going to be supported by the Treasury. It was going to be self-sustaining, but not profitable. 2, it would serve every community regardless of costs. And so the north-south high money routes that were the commerce were going to subsidize the east-west routes that were not as profitable. Also, there was subsidization of newspapers. So the merchants trading from north to south were subsidizing the newspapers going from east to west. So DC presses would be sent to rural Michigan. So when de Tocqueville comes to the US and is so impressed that these rural Michigan loggers know enough about DC politics where nothing in Europe is like this, he says it's because of the post office and the decisions that they've made. So it has a very rich history of public service. So the concept of postal banking starts in Great Britain in 1861, and from the beginning, the primary goal abroad and in the U.S. was financial inclusion. So the first proposal in the U.S. comes in 1871 from President Grant's Postmaster General Creswell, who proposed, and Grant also supported it in his inaugural address, but he proposed that they use postal banking to fund the telegraph service. And it took 40 years of proposals, and every postmaster general for 40 years, except for the Democrat Cleveland, pushed postal banking. And I hope, again, that we don't have to repeat that historically. But as is often the case with banking reform, a crisis was needed to get anything done. And the crisis that paved the way for postal banking was the Panic of 1907. Teddy Roosevelt endorsed postal banking right away. And then during the 1908 presidential debate, banking reform became a major issue. And the problem, of course, was bank runs. And it was very destabilizing. And so there's 2 proposals on the table. William Jennings Bryan, I misspelled this, I think, proposed FDIC insurance, the Democrat, and then Taft, the conservative, proposed postal banking. And Taft backed it as a conservative approach because there was less moral hazard because the government was backstopping the postal banks. And he saw deposit insurance as, incentivizing risk-taking by banks. Taft also saw postal banking as a way of helping credit-starved regions like the South and the West. So the proposal was vehemently opposed by the nation's bankers, and the compromise that was finally done in the Senate in 1910 was that 95% of the deposits would stay in the local place where the post office was. And again, localism still ran deep in our nation's history. And also that the postal banks would be labeled the poor man's banks, right? And the way that they achieved this was that they capped the interest paid. Remember when we used to make interest on deposits? That is not the world we live in anymore, but it was capped at 2% interest. And so it was a way to alleviate bankers that these are not your customers that we're going after. There were also account balances that were capped at $500, so that's all you could save. Later on, that was raised to $2,500. So the bill was eventually passed in 1910, and a new system of banking was created, the United States Postal Savings System. By 1913, the Times called it a success. It was already self-sustaining, having received $32 million in deposits within 2 years. And these were all from stocking banks, quote unquote. These are not people who had bank accounts already. They were just saving their money in their, stockings, under mattresses, et cetera. But the customer base surprised everyone. Quoting one 1913 administrator, he says, the postal savings system was extremely popular everywhere except where they expected it to be popular. It was not the West and the South that took to this. It was the recent immigrants that came and flocked to the postal banks, having recognized them from their home countries in Europe, but also the post office would meet them at the ports with pamphlets in 24 different languages. And so by 1915, immigrants owned 70% of the deposits, even though they were less than 15% of the population. But this changed during the Great Depression, as the postal banks swelled with deposits running away from troubled banks, right? So starting in 1930, deposits into postal banks doubled each year for 3 years, ending with $1.2 billion in deposits during the Great Depression. And this trend would have continued if President Roosevelt didn't have broader banking reform in mind. Roosevelt chose FDIC insurance, as we're all familiar, over postal banking to stabilize the banking sector. Now, FDR was not a fan of deposit insurance, as some people assume. It was a compromise to the quote-unquote populist rural bankers of the country. That's a different story. But as soon as FDIC insurance was created, postal banking wasn't as necessary because we didn't need the safety of the government backing. But postal banks were retooled immediately after the Great Depression, first to sell bonds to pay off the mounting debt from the Depression, and then to fund the war. So they started selling defense savings stamps across the country, and by the end of World War II, the government had raised $8 billion in war funding through the post office alone. Deposits reached their peak in 1947 with almost 3.4 billion deposits and 4 million users. And a lot of the soldiers abroad were sending home their deposits by mail because the post office innovated banking by mail. And so the deposits swelled, but the sharp rise in deposits were followed by a swift decline. By the 1950s, the postal banks were no longer attractive. They gave less interest than banks, and banks were now everywhere. There was an economic boom, and every community had a postal bank and a community bank or a credit union or a thrift, and the credit unions, banks, and thrifts could pay 3% on deposits by law, and the postal banks could only pay 2%, and so the money went from the postal banks into the community banks. By the way, this would not be true 2 decades later as the banks left those areas. But by 1967, even the Postmaster General was saying that we don't need these banks and that we should end it. And in 1966, President Johnson, in his streamlining of the federal government, shut down the postal banks. The only opposition came from the postal workers' unions. And really, the press just failed to notice the death of the postal banking system. There was one article in Time magazine, and it was full of misstatements, and all they talked about was the savings stamps. They failed to notice that three things, that three sort of huge innovations that the postal banks were responsible for. One is that postal banking was the alternative to deposit insurance from 1910 until 1933. It prevented many bank runs in the Great Depression. In fact, recent research out of Yale shows that because of the postal banks, the effects of the Great Depression were much less than, it was bad, but not as bad as it could have been. It also helped fund 2 world wars and help with the deficit. Most crucially, postal banking was the most successful experiment in financial inclusion in the United States. It's a problem we're facing again, and the postal banks brought in millions of new immigrants into the banking system. The post office could do this because, as I mentioned, since its founding, this institution has been rooted in public service over profits. This is what the top administrator for the postal banking said in 1910. He said, "It is not a money-making adjunct to the post office department, nor was it intended as such." He's speaking of postal banks. Its aim is infinitely higher and more important. Its mission is to encourage thrift and economy among all classes of citizens. It stands for good citizenship and tends to diminish crime. And also, most importantly, people have absolute confidence in the post office. Look, we may not think it is the most pleasant place to go, but we trust the post office. I like to call it, maybe some people have said it's a dinosaur, but it's not a shark. So I propose that the post office do this again. The post office could offer savings, checking accounts, money transfer, small loans. Bank accounts with these onerous fees, without onerous fees, would help a lot of people, the unbanked and underbanked, and put their money back in their pockets. These are simple transaction services that are very low risk. Now, lending is going to be controversial. All lending is risk-taking. There will be defaults and losses, but those can be priced for. And I believe that the post office, as shown by their excellent white paper from the IG's office, and some of the representatives are here, you should all read this white paper. They talk about how they could actually lower the costs through using market principles. Just as the government has created, funded, and maintained mortgage and student loans markets, the entire bank and credit apparatus, they can help create a small loan market. And this would help even the credit playing field and fix this glaring inequality in our credit markets. So I'd be happy to take your questions. That's all I have. Thank you. I'm going to let her take these.
I'll just join Marissa partially because we want to repeat the questions so that we can hear them on the tape. Otherwise we won't. Go ahead. If actually, one other thing, if folks could introduce themselves before they ask a question, that would be fabulous.
Thank you very much. Eric Garcia, National Journal. You talk a little bit about postal banking. What I'm curious about, you talk a lot about postal banking. What I'm curious about is how likely is it that what are some ways that postal banking can be done with or without Congress? And then what are some ways that you also talk about Glass-Steagall Center when we're talking about that? What ways would that help lower income communities with their financial services?
So the two parts of the question, I think, were what can be done towards postal banking with and without Congress, and then say something about how Glass-Steagall might connect to banking services for lower-income people.
I think the first question I'm woefully under qualified to answer, and there's a lot of people in this room who can answer that question better than I can, so I will perhaps let them answer it. I think there is a lot that can be done without legislation. They currently offer money orders, and so through their current legislation, it's possible that they can expand that, but I'll let them talk about that. But as far as the low-income communities, look, when community banks shut down, the post office remains in every community. Every zip code has one, and it's a place where people are already comfortable. There's also, by the way, a lot of rural America. Some of us, I'm a New Yorker, many of you live in D.C., but I drive around South Georgia sometimes, and I am shocked by how rural this country is, so much of it, you know, and call me ignorant, but, you know, there's a lot of communities where the post office is the one and only federal government branch. It may be the one and only building for several miles. Someone told me this yesterday at the World Bank that they live in rural Massachusetts, and they they drive miles into town for the post office, and that's where they do all of their business. And so I think there's a lot of low-income areas that have no banks, no Walmart, but they have a post office.
Thanks. I think we can take a couple questions and then invite others too to answer some of the ones that have been punted. Go ahead.
Hi, my name is Catherine Isaac. I'm with the Campaign for Postal Banking and the American Postal Workers Union. There's a fantastic report that came out in May of this year from the Office of Inspector General. There are a couple of staff people here from that as well. And they talk a lot about what can be done with legislation, without legislation. There's plenty the Postal Service can do right now to get started on this concept. The post office already issues money orders, cashes treasury checks. Those kinds of services can be expanded immediately. One of the ideas the OIG has is to put ATMs in every post office around the country. We could also, because there's a sort of a deal where the post office can do things for other federal agencies, people who receive federal benefits, they're all now on a debit card, and most of these people have to go to an ATM. If you don't have a bank, you're paying the ATM fee. You can walk into the post office with your benefits card and use a no surcharge ATM. This is another one of these things that just dings people who are already down, and this would be something the post office can do right now.
Go ahead. So, speak up.
So I thought you'd never ask about Thomas Jefferson. Just kidding. For 200 years, we had geographic restrictions on banks. We have unit banking in this country, and this is a very new thing that we've let banks branch all over the country. But for 200 years, if you had a bank in Athens, Georgia, where I'm from, that's all. You couldn't have a branch in Atlanta. You certainly couldn't have one in New York. And the reason, and this is very Jeffersonian and Jacksonian and Brandeis and all of this populism that runs through our history, but the reason is very much that. Because if you can take your money from Athens and send it to New York, you're not going to serve the people of Athens. You're going to serve Wall Street, everyone, right? Money conglomerates, and money likes to grow itself in higher profit markets. And so we, by force, forced banks to be small and powerless. And so I'm not saying that was a good idea, right? Jefferson says, the agrarian, the rural population is the future of this country, and he was wrong, right? We were going to be an industrial nation. However, the fears were very justified that as soon as money conglomerates, it's going to leave out the low income and the poor. And so for centuries, we've had this compact with the banks, like we'll give you a charter, but we're going to cap you in a variety of ways, and we just kind of gave up. And exactly what we feared was going to happen is happening. And you do see discomfort I don't think this is a partisan issue. You see discomfort on all sides to say, look, we support these banks a lot, and what are they doing for us? And not just what are they doing for Wall Street, because there really are two different markets here. So I appreciate your comment and for letting me talk about Thomas Jefferson.
Other questions or comments?
I was wondering if you could just talk a little bit, based on the research that you did for your book, about the real consequences that people are experiencing because of the payday lending industry. This payday lending industry is selling itself as a necessary backstop to the problem you talked about.
Yeah.
Big banks not serving low-income communities.
Yeah, so great question. So in banking speak, there's sometimes a liquidity problem, and then there's an insolvency problem. A liquidity problem is you've got enough assets and liabilities, you just have a cash crunch, and you need a loan to get from one paycheck to another. Banks do this, right? And that's why we have Federal Reserve low-interest loans to help banks deal with liquidity crunches. But we don't help banks that are insolvent. If you're bankrupt, we're not going to give you a loan because it's just going to go into a black hole and we're never going to get that back. However, people also have this, right? Someone can be cash-strapped. Right? So I just need $500 to get to my next paycheck. I've got the money coming in. I just need a little bit of help to get there. The problem is with banks, we throw them this lifeline so that they can make it and then pay us back. With people, you need that $500 to get to the next paycheck. You'll have the $500, but you're going to have to pay $2,000. And so that turns a cash crunch into a bigger financial problem. And so I think that's the problem with payday is you could take that $500, make it to your next paycheck, and then pay it back. There's a way to do that with good interest. But if we're going to give you that $500 and give you an anchor of interest, you're never going to make it to your next paycheck. And so I think, when you're so strapped, this $2 a day book is a good example. There's a lot of people who are just strapped. They are living paycheck to paycheck, and their buffers are very, very small. And when you have that small of a buffer and you have to pay 200% interest, you're not going to make it. And so I think that credit problem is harsh for people, and so this is a way for that buffer to be just a little bit smoother. And again, we're not going to lend to people who can't pay it back. But these are just people who have income, but they just need a safer loan.
Other questions or comments?
Walmart is underpricing the payday lenders and the check cashers. So I think it's going to be a choice where it's either going to be Walmart or it's going to be the post office because, as I said, we need a national presence to do this. That's how you can lower costs. And Walmart is doing it. And by the way, Walmart's products are not loss leaders. So I think some of the press misunderstands this where they say, oh, they're offering these loans at a loss so that people come in and have cash in the store. They're making a huge profit off of these. They're checking checks for, I think, $2 or $3. They're doing remittance, so international remittance for much lower cost than Western Union, and they're underpricing the quote-unquote market leaders at a profit. And the reason why Walmart can do it is because they already have the brick and mortar and people are already in the store. So I think the post office has the identical advantages that Walmart has. And so we're either going to outsource the poorest credit needs to Walmart, or the post office is going to do it. And there is profit to be made here. And Walmart is demonstrating, I think, that it can be done at a low cost. So good profits, underpriced, through a market model. Walmart is not a public institution. Thank goodness.
Hi, Susan Harley with Public Citizen. I was wondering if you could speak a little bit about how this works in other countries, how many countries already have this in place?
That's an excellent question. I was at the World Bank yesterday, so now I am fully informed about this because I tried to focus on the U.S. Because there's a lot of people that say, well, whatever, Denmark, we're not Denmark, so, you know, I don't think that way. But at the World Bank yesterday, they were saying that, so 1 billion people worldwide are banked through the post office. In fact, most postal banks abroad, to the extent they're profitable, it's through financial services. And there are at least 10 countries where the postal bank is the largest bank in the country. China has 40,000 postal banking outlets. They're banking millions of people through the postal bank and in rural areas. Same with India, Algeria, Brazil has a great public-private model. A lot of them are lending. The UK, Germany, Japan's bank just had an IPO today. I don't know if you're probably all following this, but $1 trillion in savings. I don't know what's going to happen. I'm not studying that, but it's very successful worldwide. It is also unsuccessful worldwide. So there's a lot of models out there that don't work, and there are as many models as there are sort of countries out there. But it is the norm, postal banking abroad, and some of the models don't work, and some of the models do work, and many of them have been around since the 1860s. So this is not untested. Some people have been calling it in the press revolutionary. It couldn't be further from revolutionary. It is so part of history, and every other country does it. It is just not revolutionary.
Other questions or comments? So everybody should be louder in their questions if they can be.
Yeah, that's another excellent question. So check cashing, financial services, people who don't have bank accounts. You need to have a bank account to get a payday loan. And so the payday lending market is much broader. It is, you know, it's hard to get exactly how many people rely on it, but it's somewhere from 20 to 40% of the population. The unbanked is a much smaller, that's about 80 million people. I think that's the current statistic. These are people who have no relationship with bank accounts. But there's a lot of people that have a bank account but rely on the loan aspect of the payday lending. And so these are two very different issues. Lending, as I said, is going to be very controversial. It's a different hurdle, but I think it's a bigger problem, and I think it links to the point of banks, the reason why we have bank credit, government support of banks is for credit. So I think credit is incredibly important. The financial services, that to me is a no-brainer. I mean, for the post office to do this, really, I mean, they could do it tomorrow. I'm not speaking for the post office, but really this is low risk. It is incredibly not complicated. You know, for years, banks have had a monopoly on the clearinghouses. But this used to be where you would have to meet at the Federal Reserve to, like, exchange checks. That's why we have 12 Federal Reserves around the country. I mean, this is very outdated. I mean, we don't operate in that market anymore. You really can transfer money overnight. A lot of these checks are government checks, like the military pay 10% off their checks to cash a government check. That check is not going to bounce. So why take off that much money if there's no risk? So this is stuff that the post office, I think, that's the no-brainer. The lending, I think, is crucial and important. I think the public needs more education on why that's important. But I think, and they're very different markets. And I think lending, we tread carefully, make sure we're not repeating the GSE disasters. But all lending, as I demonstrate in I don't know what chapter, some chapter of the book, is provided at the end of the day through the Federal Reserve and Treasury. So this would be no different.
One of the things that I don't think we mentioned, that you may have mentioned, is that actually if you are a low-wage worker, a checking account can get very expensive.
Yeah, I mean, and banks charge fees to repel small accounts, I think, because you really don't need to charge that fee. A lot of Walmart, for example, has a savings account where if you overdraw on that account, they just freeze it. So if you try to pay more than what you have, they just don't go through the transaction. Bank of America, this is a bad example, will pay out and then charge you $35 per day or something until you've put that back. So those fees that's not costing the bank anything to either offer, to give you the credit or freeze the account. But those fees, I believe, are to push out small savers. And they do it for an economic reason. It's not that banks are big bad guys. They just don't make money off of your small deposits. It costs them a lot of money, the same overhead to take in a $100,000 deposit than a $500 one, right? And so the $500, they're doing the same servicing, they've got the same staff, they don't want that, right? It costs them money. Whereas $100,000, they can lend that out and use it. So, the markets oppose these small deposits, and so I think banks don't want them, and so they will repel you with the fees. And they do mount. And I think for people that are unbanked, it's a rational choice not to have a bank account. When I talk to people, they say, look, I'd rather pay, for example, the prepaid debit cards. You've seen some controversy now with the Russell Simmons and all these celebrity cards. These are quite expensive, but it's more of a rational choice. So you pay something like $5 to put money on a prepaid debit card, and then $3 or $2 every time you use this card, $1 or $2 to check your balance. These are a lot of fees, but it's better than being slapped with a $35 fee just out of nowhere. So I think people just do the cost and say, okay, it's going to cost me this much money to have money on a debit card, but it's better than these random fees by banks. There feels punitive. It feels unfair to get a fee than just to pay out for a debit card. And so that's why I think a lot of people make a rational choice. I'm going to pay for the check casher. I know what their charges are, whereas banks, I don't trust them, and I've been slapped with fees that I can't handle. And so I think people aren't stupid for avoiding bank accounts.
Hi, my name is Rebecca Watson. I'm with APW.
Yes, I recognize you.
You mentioned remittances.
Yeah.
The Postal Service currently provides a program where folks in the States can send money abroad to 9 countries.
Wow.
What does that mean to the population that we're talking about who benefit from more accessible services? And then similarly, Postal Service also could then provide those remittances in the United States
Yeah.
as well?
Yeah.
How would that help people?
I mean, you have so many immigrants. This country is made of people who send money back home, and so this is a way to make that easier to get profits from that sector. Now, Walmart does this, and there's like a direct line to Mexico, right? Walmart has banks all over Mexico, and you can go into a Walmart and wire money to Mexico now much cheaper than you would at Western Union. Western Union can charge up to $90 to send $1,000 abroad, and there's all these. If you go into into undocumented immigrant areas or I spent some time in Houston among, the huge sort of Mexican population there, and there's remittance outlets, as many as there are check cashing, and they go directly to Mexico, and they're high charge, but there's a huge demand for these services. And it wouldn't just be Mexico, it would be Central America. This is a massive market. So I'm glad to hear that the post office is already doing that. I would hope that they could do it more. And then domestically, of course, that's a no-brainer. I mean, the post office already sends cash. They already deal with cash because of the money orders, and so this would be no different than that. And the post office, if they're good at anything, it's sending things. They're good at a lot of things, but they can send things domestically very easily.
Well, thank you very much all for being a part of the conversation, and thank you, Mirza, and we look forward to continuing the discussion. For those of you who didn't sign in on the way here, please do now so that we can, in fact, continue to communicate. Thanks again.